If you've been sitting on the fence and thinking about buying property in London, you're definitely not alone. Between fluctuating mortgage rates, changing stamp duty rules, conflicting market predictions, it's been pretty important to understand what's really happening, but it's hard to peel through the noise. As far as the London property market, in 2025, it continues to have significant challenges, but there will always be opportunities. Whether you're a first-time buyer looking to invest or considering your next move, understanding the current landscape is crucial. Let's start with where we're actually at right now. The London property market has been through quite a lot over the last decade, especially the 10-year period prior to the current one we're in. You could almost argue that there's been a tale of two different 10-year periods. From 2005 to 2015, it was definitely a period of relative boom. It was characterized by rapid price increases fueled by a booming economy, low interest rates, readily available credit, and significant foreign investment, particularly from Russians, the Middle Easterners, and Asia. In April 2015, the average house price in London reached $493,000. I think these charts are so helpful to see that trajectory of London average house prices over the last 20 years. Now, for the period of 2015 to 2025, you could argue that this has been much more chaotic, much more uncertain. In July 2025, the average price in London was $673,000, according to Rightmove. The average property price in London has grown considerably over the last 10 years, with data from the Land Registry showing property in the city increased in value by over 27%. However, prime central London home values have saw modest declines, with PCL lagging and prime outer London being more resilient. In terms of price stability and growth predictions, many experts have predicted a rebound in London property prices, expecting a 4% growth in 2025, according to recent analysis from Thames. This is particularly significant because it represents a shift from the uncertainty we've seen in recent years. Many economic and forecasters expect London price growth to be in line with or maybe even marginally ahead of national price rises in 2025, as reported by Rightmove's latest market forecast. This suggests that London is regaining its position as a strong performer in the UK property market. However, it's worth noting that modest growth of around 2 to 3% is expected for London property prices in 2025, according to some analysts, with performance differing between houses and flats, with houses likely to see stronger appreciation. The market is showing some interesting patterns though. Home buyers are paying on average 3.6% below the asking price at the end of 2024, according to Zoopla. This is compared with an average discount of 3.2% during the summer. This suggests that buyers still have some negotiating power, but it's decreasing as the market stabilizes. I recently did a video on the London property market, so make sure to check that out to see the latest that digs into more of these statistics. Data is also suggesting that properties are moving slightly quicker now. The shortest length of time taken to find a buyer over the past year is 59 days, as reported in the June and July, indicating increased market activity and buyer confidence. One significant factor driving the London property market is the return to office working. With more employees returning to the offices and better mortgage deals on the table, many experts have predicted a rebound in London property prices. This is particularly relevant in central London, areas that saw significant declines during the pandemic. Mortgage rates are arguably the most critical factor affecting whether now is the right time to buy. The good news is that we're seeing positive trends. In July 2025, average mortgage prices had nudged down as lenders compete to trim rates, according to the Homeowners Alliance. This competition between lenders is creating opportunities for borrowers to secure better deals. The Bank of England has been doing its part as well. In February 2025, BOE reduced its base interest rate from 4.75 to 4.5%, which directly impacts mortgage rates. And a recent additional 0.25% reduction was put in effect in August. Looking ahead, the predictions are encouraging. CBRE predicts a downward trajectory for mortgage rates, signaling that the average interest rate on a 75% loan-to-value mortgage rate for fixed 2 years will reach 3.4% by the fourth quarter of 2025, 2025 for a current rate of 3.69%. So while the lowest available rates are currently below 4%, the average rate is for 75% loan-to-value 2-year fixed rate is still somewhat higher at 4.32%. The forecast of 3.4% by fourth quarter 2025 suggests a continued downward trend from current levels. So what does this mean for buyers? These falling rates could significantly impact affordability and therefore impact demand in the market. If you're currently on the fence about buying, securing a mortgage now while rates are still expected to fall could position you well for the remainder of 2025. However, remember, it's difficult to predict if any further rates are going to actually happen. So it might not make sense to play, too specifically. Try to get the best deal you can at this point. It continues to remain a buyer's market. Interest rates are expected to ease in 2025, improving affordability. This makes it a strategically strong moment to enter the market before property prices start to increase again. The stabilization period often represents the best buying opportunities. You're not competing with the frenzied activity of a hot market, but you're also getting in before the next growth phase begins. For Americans, couple this with still relatively strong dollar compared to historical exchange rates, now is definitely a good time to consider buying in the London property market. Now, if you're considering buying a buy-to-let investment, the rental market fundamentals are strong. By 2025, experts forecast a moderate annual increase in rental prices averaging between 3 to 5%, driven by continued urbanization and population growth in London and persistent demand for rental properties due to affordability challenges in the housing market. Rental yields range from 2.5% to 4% in prime areas, while 5.5 to 6.6 in emerging markets and further afield, providing options for different investment strategies and risk profiles. While these yields might not knock your socks off, if price appreciation does resume, then most London investors historically have been willing to forego yield for long-term appreciation. Now, while I've highlighted some of the pros of buying a London property now, let's review a few cons. There's always renting, which remains cheaper than buying for most buyers in 2025 because of the affordability. This is a real reality check for many potential purchasers. The deposit requirements and ongoing costs of homeownership are still substantial barriers. In addition, prime central London faces direct impact of higher stamp duty and an end to the non-dom tax regime. These changes are already affecting the luxury market and could have broader implications. There's also the upcoming change to stamp duty relief. The current 0% rate threshold for first-time buyers reduced from $425,000 down to $300,000, which will significantly impact affordability for many London buyers. Now, in terms of what some of the property professionals are saying, many experts are cautiously optimistic for 2025. The combination of stabilizing rates, improving mortgage rates, and return to office trends is creating a more balanced market than we've seen in recent years. However, buyers and investors should proceed with caution and take a long-term view. As far as area-specific advice, discover the top property investment hotspots in London for 2025. Areas of East London typically offer the best yields. It's important to assess each area on its own merits rather than taking a blanket approach to the London property market. So, as in terms of the verdict, after looking at all the data, expert opinions, and current market conditions, here's my overall assessment. For long-term buyers, 2025 represents a reasonable opportunity to jump into the London property market. Prices have stabilized, mortgage rates are improving, and the market fundamentals remain strong. If you're planning to hold for 5+ years and can afford the ongoing costs, the current environment offers good value. For investors, the landscape is more complex, as we've mentioned. Buy-to-let faces regulatory challenges, but rental demand remains strong. It will ultimately depend on area selection and your ability to navigate the tax implications. For first-time buyers, act carefully if you don't want to wait indefinitely. The stamp duty changes and potential rate improvements create a narrow window of opportunity, but don't rush into a decision you're not financially ready for. The bottom line is that there's never a perfect time to buy a property, but 2025 offers a more stable environment than we've seen in recent years. The key is understanding your own financial situation, having realistic expectations, and focusing on long-term value rather than short-term gains. Remember, property is a long-term investment. You're buying a living, breathing asset that will definitely have challenges and changes over time. I hope you've enjoyed this video, at least to stimulate some things you need to be considering if you are thinking about investing in the London property market. Please make sure to hit that like button to let YouTube know that we're putting out great content, and consider subscribing as we put out weekly videos about the London property market and living in this fantastic city. Bye for now.